Hello ladies and gentlemen, this is Jack Graham from Simply Vegas. Today I'm going to give you a real estate market update. I'm going to go over what's happening in the US, as well as all the forbearances that we're having, the unemployment rate, and I'm also going to go over a little bit of the predictions that the experts have for the real estate market next year and in the upcoming years. And towards the end of the video, I'll go over the Las Vegas real estate market a little bit more into detail because obviously that's where I work. And I hope you like the video. And if you do, please like, comment, and subscribe to the channel. That way you can get notified every time I have a new real estate market update. So without further ado, let's get into this. All right, so the first data that I wanted to cover is the Housing Market Recovery Index. Now, this is what was happening at the beginning of the year. We had an increase in activity when it comes to real estate, and it went up all the way to 106.5. Then obviously coronavirus hit and it slowed down a lot, the activity. Although prices did not drop necessarily, the activity did slow down. So we had less people selling, less people buying, all the way until May. And then we had a reversal here. And that's what has been going on ever since. We have had officially now a V-shaped recovery. In fact, we are at an index of 107.2. Now, this graph does include everything when it comes to demand, supply, the price, and also the time on the market. And, that's pretty much what's been happening everywhere in the United States. And what I wanted to go over is the unemployment rate, first of all, because obviously, as we know, unemployment rate does influence the real estate market. Obviously, if people do not have a job, they will not be able to qualify for a mortgage. So right here at the beginning of the year, we had record low unemployment rates at 3.5%. Then obviously in March, we had the pandemic hit and unemployment went up to almost 15%. But the good news is that ever since then, it's been going steadily down. Right now, we are at 7.9% unemployment rate, which is great news. That means we're out of the worst part. In fact, if we look at what has been happening historically and we compare it with the other recessions, right? We've had in the Great Depression, we've had 108 months of unemployment rate greater than 9%. This was in the 1930s, obviously. Then we had the Great Recession. That was the mortgage crisis that we had in 2008, where we were over 9% unemployment rate for more than 30 months. Then we had the oil recession in the 1980s for 19 months. And then compared to right now, we have 4 months of a recession pretty much being over 9% of an unemployment rate, which is great news. That means we're out of, it's showing that we're pretty much recovered. We've had this V-shaped recovery in the United States real estate market. And another interesting factor that I wanted to take in consideration right now is the percentage of homeowner equity in 2020. This is updated as of September. And right here we have a 42% of people that have their home paid off, right? But the interesting fact is that all of these people right here, all the way until 92.7% of people have at least 10% of equity. Now, why is this important? It's important to note this because if people have equity in their home, let's say something happens, they cannot pay for their mortgage, they can always put their home on the market. And if you think about it, 92.7% of people could sell their home and at least break even. Because obviously you have closing costs that you have to take in consideration. You have brokerage fees that you have to pay in order to sell your home, the commissions, right? And that amounts to about 7-8% of the total purchase price, which means that if 90% of people were to sell their home right now, they could break even on their home, which means people are likely not to go and foreclose on their homes, which could cause a big drop in home prices and the famous crash that everybody's talking about. But I just wanted to point this out because the percentage of home ownership is very important, especially when you compare it to the 2008 recession when people were just way over leveraged on all of their homes. Everybody was taking out home equity line of credits and it was super easy for banks to do so, right? again, we need to focus. I don't want to go into this too much into detail, but we need to focus on what's happening right now, because back in 2008, lending standards were way lower, and it caused a big crash in the real estate market, which is not the case right now. It's very difficult to get a loan. So the next slide that I wanted to cover is the mortgages that are in active forbearance. And as you can see right here, ever since May, when we had that super low high unemployment rate, it's been going down steadily. We are at 3.59 millions of active forbearances, which means, people are not really, they're paying off their forbearance that they had, or they settled with the bank somehow where they don't have to worry about the forbearance anymore. And that's good news, because that means, this active forbearance is going down, and it's predicted to go down even further, which is good news for the real estate market. Although I do predict that somewhere in the future, unless somewhere in the future there's going to be some kind of inventory coming on the market, I don't think it's going to be significant enough where it's going to hurt home prices. If anything, it might slow down the craziness that's been going on right now. In fact, in Las Vegas, we've been having a lot of multiple offers on every listing that is priced well, which means, we are definitely in a seller's market right now. And a little bit of inventory actually would help the market, because it would allow people that are looking to buy a home to find the right home for them. And, having a little bit of more inventory is not really going to hurt, in my opinion. What I mean is, it takes a little bit more inventory than just, what we're seeing right now to cause a dent in the market. As far as the projections on future home prices, where all the big players that in the real estate market are predicting that there's going to be an increase in home prices in the next year. And here we have all the big players that are saying, hey, there's going to be an increase in home prices next year. That's great news, because back in March, April, everybody was predicting that the home prices were going to drop. And now that everything has recovered so far, everybody's changed their predictions, which is normal to happen. But, if you look at our past videos, you'll see that back in March, we were saying that, the real estate prices are probably not going to get influenced. And in fact, I didn't expect it, but they actually started going up like crazy. And the reason why is the months of inventory that we have on the market. And what we're seeing right here is that compared to the 2007, 2008 crisis that we had, where we had a bunch of months of inventory, because we had too many builders build too many homes. And that caused, a lot of inventory on the market, which eventually, caused the drop in home prices, and then the whole mortgage crisis happens, right? And that's what caused the home prices to go down. But right now we're not in that situation. If anything, we are in the same situation that we were in the 2000s, or even lower actually. So this is again great news for the real estate markets. And this means that likely, these prices are going to keep going up according to what we're seeing right now. But let's get into a little bit the real estate market in Las Vegas and what's happening with the home prices. Now, this is what's happening ever since 2006. As you can see, in 2006, we had $313,000 for the median sales price of a single-family home in Las Vegas. Ever since then, it's dropped for the mortgage crisis that we had in 2008, and then it went down to a low of $123,000. That was a great time to purchase a home in Las Vegas. But hey, better late than never, right? Right now we are 100. Right now we've been going up. Last year, to give you an example, in August we were at $300,000, the median sales price, which compared to 2006 it was lower. But just this month we hit $320,000, the median sales price, which is higher than before the mortgage crisis. You see a lot of headlines out there explaining how, because of the median sales price being so high, that now there's going to be a housing market crash. But at the end of the day, we can't really compare the two. And the reason why is because after I made another video, which I'll link below, after we adjust the median sales price by inflation, and after adjusting it by super low interest rates that we have nowadays, the affordability is actually higher in the real estate market. People can afford more home compared to 2006, way more home. In fact, I'll link that video down below, and that way you can watch that video and understand why we are in a different situation compared to 2006. But yeah, so median sales price at 320 for single family homes in Las Vegas, which is great news. As far as the months of supply, we've had, obviously back in the recession, we had 90 months, which was crazy. And now we're down. It's been a healthy market ever since. However, right now, let me get out of this. We are, if we look at last year, it's been going down all the way at 2.7 months of inventory, which is very low. It's definitely a seller's market here in Las Vegas. But that's gonna be it for this video. I wanted to go over a little bit of what's happening so that you are informed and have all that data that can allow you to make a decision and say, hey, I'm pretty confident that the real estate market is going to keep going up. But that's just my opinion on what's going to happen on the market. You have to make your decision based on this data that you saw today. And then that's the goal, right? You want to be able to make a decision and say, hey, I'm not really worried about the real estate market because of this reason. I think we're out of the worst that we've had during the pandemic. The unemployment is going down. I feel pretty confident to buy a home right now, right? And that's the problem that we have nowadays. At least that's the feedback that I get from some clients saying, hey, I don't feel comfortable buying right now because I just, homes are at record high level, and it's a crazy seller's market. So why would I buy right now? But yeah, anyway, thanks for staying with me. Again, if you haven't subscribed yet, please subscribe down below so that you can get notified every time I post a new video. Thank you so much for watching. My name is Jack Graham. I'm with Simply Vegas. I'll see you on the next video.